this morning on NECN. The latest job numbers just released. Unemployment actually fell. U.S. employers adding about 157,000 jobs in July. A little bit less than expected, but still showing pretty strong job growth. For a closer look at the numbers and what it means for the economy and the markets, Doug Butler of Rockland Trust joins us. First of all, it's great to have you in. My first question to you is, what are your thoughts on the numbers in general?
Well, the numbers came in a little weak of consensus, but the good news is the previous 2 months' numbers were revised upward significantly.
Oh,
yeah, so it really looks like overall the last 3 months the job market has been really strong. These numbers came in a little weak, and there's probably a couple of good reasons behind it. One of which is Toys R Us's big liquidation happened this month, and we lost about 32,000 jobs in the toy store sector.
So something like that could actually have a material impact on the whole national job.
Right. I mean, it's 32,000 jobs that were lost in toy retail,
right,
which probably equates to Toys R Us.
Right.
So that's
probably a one-off. You know, I'm curious because you have the situation where we're growing jobs. Unemployment rate is at 3.9%. You would think that there's incredible demand for labor out there, and the response is people at home who don't necessarily follow the economy. You would think that if there's a lot of demand for people to work, then they have to pay more to get people to work, but it's not happening. Americans aren't making more money right now. Why isn't that happening?
Well, I think a lot of the function is the people who are looking for work and the jobs that are being offered, there's still a bit of a mismatch there. So there are people coming off the sidelines and getting jobs, but again, one of the biggest areas where people are looking to hire is things like, you know, CDL truck drivers. It takes a long time to get certified as a truck driver, and you can't build up that base from a zero start. So I think some of it is the jobs that people are looking to get and the jobs where people are hiring. There's a mismatch between that. So there's not going to be an opportunity for wage growth there as strong. I think that also companies are still looking to hire and hire profitably. They're really, you know, people are still hemmed in on productivity.
Right. Yeah, efficiency has been a huge thing ever since the Great Recession. Okay, I want to talk about the overall economy and then pivot to the markets. I mean, in general, what's your viewpoint from where you stand in terms of the overall economy in the U.S.?
The overall economy is doing really, really well. It's really strong. I know it's been really strong for a long time, but expansions really don't die of old age. They die because of somebody makes either a policy misstep, either at the Fed, at trade policy, or some sort of geopolitical event.
Okay, so great transition, because we have these tariffs that are looming. We see prices, Procter & Gamble raised prices just the other day. Do you see some of these factors, a trade war or maybe some inflation, as possibly being a hiccup in this growth story?
I think a trade war could certainly be a hiccup. And one of the things about the trade war is we're seeing imposition of tariffs, but we're also seeing the dollar strengthen. So again, we can impose tariffs on China, but if the yuan goes down, all of a sudden, you know, the Chinese are making the same amount of money, even with the tariffs. So that and then they impose tariffs on our exports. So again, trade wars are generally a really bad idea unless it is a completely one-sided arrangement, and that just isn't the case with China now.
Okay, and finally here, the markets, obviously you manage money for people. What are they asking for? What is the movement right now in terms of, are people taking profits with the market up like this, or what's going on?
People are concerned. They're not taking profits off the table, but they are certainly rebalancing. They've done really well over the last 12 months or so, and they're dialing it back. You know, this year it's, you know, for most investors who are a mix of stocks and bonds, they're probably pretty close to flat. So that they're not, but that's still way ahead of where they were 5 years ago, 7 years ago, and certainly 10 years ago.
So there's concern, but still some optimism. Would you say like a cautious optimism?
Yeah, I think people still think, like, look, the economy's doing really well. People are having jobs. People are finding jobs. The labor force participation rate didn't go up this month, but it's still strong relative to where it was last year.
We appreciate it. Doug Butler from Rockland Trust. Joy, back to you.
Thanks so much, Brian and Doug. Some other news.